Hi, this is Colorado Real Estate Conversations Podcast. Today we've got Daniel Calvert with us. He's a multifamily investor. It wasn't always that way. And so he's going to introduce himself and tell us a little bit about his story.
Yeah, hi, I'm Daniel. Thanks for having me. So I recently purchased a fourplex. I have that thing rented out now, so it's a cash flowing asset for me. And Matt was my realtor. So yeah, it was a really, really good experience. And so far, so good. Been a good investment. And we hope to keep it for the long term, and help build financial independence through that.
That's awesome. So let's go in a little bit into your background. This is not your first property that you bought.
No, true. Yeah. So in 2018, I was a first-time home buyer, with no financial education or any
How old were you when you bought?
I was 23, almost 24. Yeah. So, but yeah, I was trying to get out of my apartment at the time. I wanted a yard for the dog, essentially. And I was not a money guy, not a money saver, nothing, but I looked into it. I looked at some properties just on realtor.com, and I was shocked at how quickly people call you. Clicked on one, and then I had a realtor on the phone like 20 minutes later. It was wild. Anyway, yeah, so I was looking into that, and then through a family friend who was actually my Spanish teacher in high school, who became a realtor, I started looking at some properties. I found out about a first-time homebuyer program through CHFA, Colorado Housing Financial Association.
Yeah, CHFA's right.
Is that, I don't know, or AID? Is it association or AID?
I don't know.
All right, whichever one it is. Shout out CHFA. Anyway,
Yeah.
So I got a CHFA loan for the down payment, which I kind of, years later, I have a different opinion on, but at the time it was helpful for sure.
And now you got the kind where you paid it back if you sold the property?
Yeah, correct. So as far as I remember, there was a couple kinds, and they're limited based on income. So we looked into, because I was close, I was right on the bubble at the time. I was an EMT. So I was working on an ambulance. Obviously, you don't make that much money on there, but I was working on the Air Force Academy, where at the time I made probably the best money of any EMT in the country.
Okay.
Yeah, because contracted pay. Anyway, all that being said, so we looked into the first option, which is a just free and clear grant, essentially, that they give you for the down payment, where you never have to pay back. I didn't quite qualify for that. So we went with the second option, and there may have been other options.
There's 3 options.
Okay.
Yeah.
Gotcha.
I know of.
Gotcha. I think 3 sounds right for the time. It's so long ago, it's hard to remember. But we went with the option where you pay it back if you refinance, sell, or rent it out. And of course, that third one, rent it out, is anyway.
So then in the end, you ended up having a lot of problems with that, and you ended up selling it.
We did, yes. So what happened? I lived in it for about a year. And then I moved to Toledo. I got an opportunity through jiu-jitsu, which is how we know each other. I got an opportunity to go train with a world champion out there and teach at his gym and everything. And so while I was doing that, I rented it out. And I had my parents, who are not property managers, manage the property. And so they wanted to try it out and get into it. And so we ended up just having a time of it. And about a year into them managing the property, they just wanted out. And so from where I was, I wanted to keep it, but I was, across the country.
Yeah.
And so I ended up just kind of folding, and we sold it.
And you made a little bit of money on that?
We made money on it. Yeah. I bought it for $185, I think. And then at that time, it's 2018. And then we sold it for $230.
Nice.
So made some good money.
That's pretty good.
Yeah.
So that funded your jiu-jitsu time in Toledo?
It did. Yep. It funded the back half of it.
And that was at Adamus?
Adamus. Yep. Correct. Adamus Jiu-Jitsu.
And then, so from there, we talked about this. We actually recorded this podcast once before, but I messed up the sound so bad that we're doing it again. So I'll jump to the really interesting part of the story. So you're driving back from Toledo.
Yeah.
I think you're moving back home to Colorado Springs.
Yes.
And you had kind of an epiphany. So let's talk about that.
Yeah. So I had an idea. So to give you a background how I got there, I have a cousin in Florida who, his name's John Wanberg, or whoever looks into this, who's got a very successful real estate company out there. Now, my brother had the opportunity, because he is a licensed home inspector, he had the opportunity to go work for my cousin for a little while. And so he moved there 6 months before I moved to Toledo. And then he moved back probably a year and a half before I moved back. But anyway, so now we were going to be in the same area. So I thought, you know what, we can work together on some things. So I called him up on my drive back. I think I was in Nebraska at the time. Anyway, Nebraska is just a boring part of the. Yeah. So you got to entertain yourself somehow, right? Anyway, so I told him that I had this idea that we get a duplex and either one of us or both of us live in one part of the duplex and rent out the other part to cover the mortgage. And so in my mind, that was a good, smart idea to get into real estate investing. Keep in mind, this is before any kind of research. I read any books, anything. So I called him. We talked about that, and he was kind of on board with the plan. And we just kind of left that on the back burner for a while and didn't come back to it. Fast forward a few months, 6 months ish. I had been established at my job that I had gotten to come back here and saving money and things like that. And then I also had an opportunity to teach at Prime, which is the gym we both train at now. And so I was making some money through that. And so now I was pulling down some money and putting away a lot of it. And I wanted to figure out where to put it.
Yeah.
So I didn't want it to just sit in a savings account and do nothing. I wanted to, and so I had already had this idea for the multifamily home. So
you're putting away money, but you have a long-term plan for it, and in the meantime, you're just stacking it up.
Yeah. In the meantime, I was just putting it in a savings account, and I was thinking okay, of course I want to buy a duplex at some point with it, right? But can I do something with it in the meantime? These are some of the questions I had. And so we have another training partner who is a home lender, Jay Rakes over at Equity Home Lending. So he's a successful real estate investor as well. I knew that about him. And through my roommate at the time, I also knew that Jay had done a few no cash down deals for some of his real estate investments. So that was, obviously, I was very curious about that. Right around the same time, this is an important part of the story too. I had been lifting with my brother in the mornings because he was running through a difficult season in his life, and we were just trying to do something productive, just keep ourselves sane, on one hand, and also just, do something productive. Life's difficult. Yeah. When life's difficult, I think it's better to
do something hard.
Yeah. Take out your energy and do something hard than it is to just wallow. Right. Anyway, so he kind of called me out a little bit because for my job, I was driving all the time and I was just listening to music. So I've heard all these songs how many times? What am I getting out of listening? Of course, it's not bad to listen to music. And he was like, why don't you get an Audible account and listen to some books, improve yourself? I did. And the first one I read was Rich Dad, Poor Dad. And I know you're a big fan of that one.
Yeah. Yeah.
And as is every entrepreneur ever, probably.
I read it one day.
Yeah. It's a good book. It's a great book. Anyway. So I started knocking out some of these books, and then I also spoke with Jay. I texted him and set up a time to meet with him and talk about, what to do with some of this money, how to come up with a plan. And he had a very good idea, which was to invest my savings and everything I could essentially just have enough money around for emergencies, invest what I could into a brokerage account. And you can do any kind of service, but he likes E-Trade. I like E-Trade. It's the only one I've used. So E-Trade is where I went. Anyway, E-Trade has a service where you can borrow against your investment once it gets to a certain level. So a line of credit.
It's kind of like margin, but it's not really margin.
It's not technically margin. I thought it was a margin line of credit for the longest time. It's just a line of credit.
Off that.
Because a margin line of credit, you buy stock on margin.
Right.
I guess is
so
the only difference.
A secured line of credit.
Secured line of credit. Exactly. You can use it for, they asked me a question when I applied to open it, as far as what are you using it for? One of the options was real estate, which is obviously what I put.
Okay.
But I think there was several options, and I don't think it matters too much what you're using it for. Anyway, that being said, so they had a line of credit. And so his idea was invest all your money, get it to where you have enough available through that line of credit for a down payment on this multifamily home, and then go from there.
And what were you aiming for?
So I was aiming for, that's actually kind of funny. There's many blunders throughout the story, right? Always. But I thought you could borrow against, I misunderstood him actually for a while until we talked about it later. I just figured you could borrow against your assets. So, I figured, okay, I can add up everything I have, like my Acorns account, my E-Trade account, my Vanguard account, and then just talk to somebody and borrow against it. I didn't know right away that it was a service offered by E-Trade, secured by E-Trade, not
by that account.
Exactly. Which is fine. I don't want to say delayed the process, but it was just a little hiccup down the line, a few months. Anyway, so I was aiming, I thought you could borrow against it 80%. Turns out you can borrow against it 60%, depending on the shares that you have.
Okay.
Anyway, so what at first I was aiming to put like $30,000 in there or something, and then start looking. And then after I got to 30,000 pretty quickly, and then once I got there, I met with Jay again to kind of iron out some more details for the plan. And then I learned it was a 60% you can borrow against. And I also learned that my target needed to be a little bit higher. So then it became, okay, we want to have about 60,000 invested, and then we can start looking, and we can be pretty secure. We're going to have enough for down payment in that line of credit. We're going to have enough for if something comes up.
Yeah.
So also the loan type we're shooting for was a FHA loan, owner occupied. Yeah.
Okay.
So we could do 3.5% down. So that's where we kind of get that 60,000. I still have the notebook somewhere. That was I think I wrote in the notebook, I wrote a note that says, can do it at 50,000. If you're smart, we'll do it at 60,000.
Okay.
Something like that. Anyway, yeah. So that was the goal. And then, so it took me, I spoke with Jay about that in January of 23. And then we closed in September 24. So that's about a year and a half, right around there. And we started looking in the summertime.
Yeah, we did. We looked for a bit.
Yeah, we looked for a while. We looked at a bunch of different properties, which was a lot of fun actually. But but so we got there. So we got to the point where I was looking and ready to go
So you got to the fourplex idea.
Yes, that's a good question. So my head, it was duplex because I thought duplex was attainable. Having known nothing about any of it, I was like, I think you could probably do a duplex. In my head, fourplexes were $1 million properties, all of them, which some of them are, not all of them. Anyway, and so through speaking with Jay those first couple of times, I think even in that first conversation, he said, if you could do it fourplex, that'd be great, and so that got me thinking, okay, maybe I can. And then I met with him 2 or 3 times just to iron out numbers and really like nail down, like, what are we actually doing here? And one of the first times I met with him at his office/house was he looked at the numbers, looked at some of these fourplexes and how much they're going for. And I really saw, okay, this is an attainable thing to go for the fourplex. So from then on, I was like, all right, go through the fourplex. Now, when I was getting to I think it was my first time I was thinking I was almost ready to start looking, I was about $25,000 invested. So obviously not the end goal, but I was getting there. And so I met with my brother another time. And I just asked him, I was like, so I'm getting pretty close, because he was always going to be invited into.
Oh, okay. It was going to be a partnership.
It was going to be a partnership at first, but I was making so much headway on my own, and we hadn't talked very much about it, and so I just had to touch base with him. So I met with him, and I mean, he couldn't be cooler about it. But I met with him and I asked him, like, so I have this much invested. I'm getting pretty close to start looking. Where are you at? Do you still want in on it? What are we thinking here? And he's like, I have not been saving anything. And I was like, okay, well, I just want to let you know I'm not going to wait for you on this one. And he was like, I understand. No problem.
Yeah.
So then from then on, I was like, okay, so this is my thing. And in the future, we may work together on something. Like, I'm totally open to that with him. But yeah, he's got
everybody in their right time, right?
Everybody in their own time, right? It's just like a lot of things. The best time to do it is when you're young. The second best time is right now, right?
Right.
So,
when you can get it done, sometimes that season of life is different for everybody.
It's true. That's very true. Yeah.
So a fourplex is, that's a little different animal than a duplex.
Oh yeah.
Yeah. So when we were looking at properties, we first started, I think the first one we saw was a triplex.
Yes.
Where it was
really a house with 2 outbuildings.
With 2 ADUs. That really was it. And then we looked at some duplexes and we looked at some fourplexes. And so what did that process teach you about, like, looking at property?
Yeah, so it was a really good exercise to learn how to not be emotional about investing, especially with homes. Houses are kind of a gray area. Once you get to duplex, fourplex, things like that, it's less so, right? Because it's more clear cut an investment. But
if you're going to live in it.
But there is that aspect to it. And then single family home, especially, people get emotionally attached.
Yeah, they do.
Because it's your home. You can't even blame them. It's a big part of people's life. It's a dream for many people, a long-term dream. So people are going to get emotionally attached. For the way we were doing it, I really enjoyed it. And I'll even say the first time I was looking at homes, I looked at one, I liked it, we put an offer down on it, and it worked out. So So it was good. I mean, of course, there's a little bit of emotion in there, but so to come at it from an investment standpoint.
Yeah, we had talked about like, what's the cap rate for this home?
Yeah.
What are we looking at for expenses? What can we see for, so we looked at it from an investor's perspective.
100%.
Right from the start.
Yeah, right from the start. And that's, I mean, one part because we're looking at multifamily homes.
Yeah.
And part two, because I had a little different philosophy as far as investing in finances. And I shouldn't say a different philosophy. I had a philosophy as far as finance at this point.
Yeah. And we talked about that strategy. Like this was an investment. This was
absolutely
what we needed to get to. So every conversation I remember, okay, the cap rate is this, not the view is this, not the feel is not the neighborhood.
Right.
This is the cap rate.
Right.
And so, multifamily investing is really, any commercial investing it's all about cap rate.
Yeah.
And not all about cap rate, but it's like, how much is this going to actually bring me money?
Yeah, for sure. It has to be. It has to be. And we had the added layer that neither you, me, nor Jay knew about right away.
Right.
And so, and I mean, you and Jay are experienced investors and in the business.
But I've never done multifamily.
Yeah, we've
FHA.
never done an FHA multifamily. So the hiccup we ran into, if you can call it a hiccup, I think it's a good rule.
I think it's great.
After everything. And even when we weren't even sure if we were going to be able to do the fourplex because of this rule, I thought it was kind of an intelligent rule. But it's the FHA self-sufficiency test, meaning 75% of the cash flow has to cover the entire mortgage. So that was a challenge because even in my conversations with Jay leading up and in kind of the whole 1.5-year process of planning this, I was prepared and thinking I might need to be paying about a quarter or less than a quarter, but less than or up to a quarter of the mortgage so that I could get into the investment. I could live in there. I would still be, of course, paying part of my mortgage, but I would have this investment property for the future.
But the multifamily where you live in multifamily and they have that self-sufficiency test, it guarantees that money cover the mortgage.
It guarantees that you're going to cash.
Yeah.
Which is why I like it, which is why I'm about that rule.
And it really drove us to look really.
It did. Yeah. And that's the other thing. I mean, just the challenge of like, I guess there's two ways. Anytime you run into an obstacle, there's two ways to look at it. It's a deterrent or it's a let's be better.
Yeah.
It's a growth stimulant.
And we just got better.
We got better, which is really kind of really cool.
Yeah, we dug around and we looked at that duplex and then we'd put an offer on it. And we couldn't come to an agreement with the seller. And we were $10,000 off.
Yeah, it was kind of, but I mean, you got to have that walkaway point, right? Mm-hmm. Especially when you're investing, you have to.
And I'm glad we just walked away from that property.
Yep.
Because that next day I was frustrated. And so I started really digging deep and calling around and figuring out, and we found that fourplex for you.
Yeah.
And we moved on it pretty quick.
We did. We moved on it quickly. And then we closed in 30 days, which I still feel bad a little bit for Jay, just because I know Jay was a stressful month. He worked hard.
Yeah.
He worked hard for it. You both did. I could not have found a better team.
That was a lot of fun.
Yeah.
I mean, because it was a difficult, there was a lot involved with that deal.
There was a lot. And I mean, you at the time were a new real estate agent.
Yep.
Of course, it was my first investment property. So obviously
it wasn't my first investment property, but it's the first investment property that I was helping somebody else get.
Yeah. Yeah, for sure. But yeah, you've been an investor a long time.
Yeah.
Yeah. So anyway, but yeah, so it was new for you, it was new for me, and then all of these different things as far as closing an FHA owner occupied loan through Jay. There were a lot of challenges for him too. I know.
Yeah.
I don't know as much technically about him, but yeah, so I know.
Yeah, we dug in. I was helping him close out all of those underwriting points. So there was a lot going on there.
Yeah, a lot.
There was a lot in the background.
Yeah, there was a ton. Yeah, and I remember. I mean, it was funny because of course we're all friends and we train together and everything. So I would see you guys at different times at the gym or other things. Me and Jay and a bunch of us went up and watched the one fights in Denver during that time.
I couldn't. I remember. Yeah, you guys invited me to go. I couldn't make it.
Yeah. It was fun. But anyway, I was sitting next to him at that, and I think it was here or it might have been another time. But I was talking to him and I was like, wow, well, it seems like we're making headway. We're almost, we're gonna get this thing done. And he just went, I've had less stressful months. I was like, okay, he's feeling it. But no, it was, I couldn't have asked for a better team.
Yeah, that was a lot of fun getting that deal.
That was good.
And the outcome was ideal. Because when you and Jay were like, talk to me and you're like, this is what you want. I was like, oh my gosh, it's going to be really hard to do.
Right.
I was like, let's go.
For sure.
Let's figure it out.
Yeah.
And then we got it done.
We got it. And it was, we had met. I don't know if we'd looked at anything yet, but we had met. And then a couple days later is when Jay discovered this FHA self-sufficiency.
Yes, that's right.
Yes.
That's right. Because we'd met just to talk, like,
yeah,
what's the idea?
Talk about the plan, go over,
Yeah.
all this other stuff. And then really for you to introduce yourself to me as
That's right.
an investor.
That's right. Because we rolled at the gym.
Yeah.
And you were already my coach.
Yeah.
But I never really told you what I did.
Right. Exactly. And it was funny because, I mean, this is why I say lucked into such a good team, is because in my mind, if you're looking for a realtor, or at least how I see it, I would prefer to go with a new realtor who I can trust versus an experienced realtor who I don't know anything about.
Yeah.
You know what I mean? And so in my mind, that's what I was doing. Because we had just kind of off the cuff talked a little bit. You told me you just finished your real estate course. And I was like telling you that I was getting close to looking for this. Even in that conversation, I think you said something about cap rate, which I hadn't heard the term before, but you're like, yeah, you probably want an 8% cap rate. And I was like, well, he probably knows something, but I'll give this guy a shot. You know what I mean? Like, I know I can trust him.
Yeah.
And then we met and we had that conversation. I was like, oh, wow, I got the best asset I could have wanted. You know what I mean? And
yeah, I've invested in a lot of different properties.
Yeah, for sure. I didn't know that at the time, but yeah. And it ended up being great.
Yeah, it was a lot of fun. And the reason I got into real estate was because I wanted to help guys get into multifamily investing or single family investing, but do it right.
Yeah.
And do it in a way that really helps them build equity.
Yeah. And I think I can speak for all of your clients when I say we really appreciate it.
Oh, thanks.
But
I'm having a blast and I'm loving doing it.
Good. That's good. That's good. You got to do what you want to do. Right?
Yeah. I'm having a great. Yeah. Before this, I was a trader and then I also invested in real estate. So
okay.
I was a futures trader and I also invested in.
And I knew you came from the finance world.
Yeah. I worked at a prop desk, a couple different prop desks.
Okay.
One out of New York, one out of Chicago.
There you go. Gotcha.
So yeah, doing futures trading and then, yeah.
And that's something I know nothing about.
Yeah.
Futures trading. I mean, my stock knowledge, my stock market knowledge, I can operate my E-Trade account.
There you go.
That's about it. And I just do total market index.
You do a lot better than most people though.
Yeah, for sure. Because
you got a good strategy and I just keep doing what you do.
Yeah, that's the plan. That's the plan. But that's the thing we were talking about before as well is there's no financial education.
Yeah.
Just offered to people.
Right. Yeah. Yeah. We talked about this last time a little bit, but you read this book, Rich Dad Poor Dad, then you kind of led you down to multiple different books and educating yourself.
That and Jay's recommendation.
Yeah. Jay has got a lot of good recommendations. There's just not a lot out there for people unless they actually go find it themselves.
Right. Right. And it is available when you go.
It is. There's tons of it available.
But I mean, what if you had to estimate how many adults percentage-wise in the U.S. actually have some kind of viable financial education, what would you estimate it at?
20 to 25%.
Yeah.
If that.
Yeah. And that I think that's generous.
And a lot of that might be questionable.
For sure. Totally. Because that's the other thing. Like once you get down the rabbit hole a little bit, I mean, there's how many financial gurus that have the answer, right?
Right.
This is the only way you should be doing things. You know what I mean? And so most people, that leaves most of America's youth and young adults just grasping at straws, just doing what their parents did.
Or just doing what they're told. And really, it's not that they're doing, not always doing the wrong thing.
Right.
But it's just they could just amplify their returns so much more.
They can absolutely amplify amplify their returns, or they might be doing the wrong thing, or they might be doing something that might be good, might be bad. They have no idea why they're doing it.
They don't understand the risk profile that they're exposing themselves to.
Right.
That was a conversation you and I had when we first started looking at this. It was like, let's talk about the risk of the situation.
Mm-hmm.
And that self-sufficiency test of the FHA really does clarify the risk. And it does. I mean, because
it minimizes
back in the loan.
Mm-hmm.
So they want to, get rid of as much risk as possible. And so you really should look at that and say, okay, well, that's, they look at this as from a big numbers perspective.
Absolutely.
Look at this from a small numbers perspective and still eliminate risk.
Yeah. And that was a point Jay brought up too, is because when we were, thinking about this FHA self-sufficiency test and thinking, is this going to be too big of an obstacle to make this happen? That was an interesting point Jay said. It was like, you may want to think about this.
Yeah.
Because if the FHA is essentially the easiest type of loan to get and they're not behind it, They're not behind this idea. So that tells you something about it. But, we found something within that satisfies that test. And I do think it is a good.
Yeah.
Obviously, this in this case, for me, this is a really good opportunity, a really good investment.
Yeah.
Now,
I think what we learned from that was there's a lot out there that is garbage.
We did. Yeah. Because we looked at a few fourplexes that weren't it. But,
they were priced so really high, and yet their cap rate was like 4%.
It's terrible. Yeah, it's terrible.
You'd be better off buying a bond.
Yeah. Oh, totally. Totally.
It didn't make any sense.
Or you have some high yield savings account that do better.
Yeah, exactly. My high yield savings at E-Trade does better than that.
Yeah. There's no reason for that. But anyway, yeah, I mean, I was almost a victim of, I mean, I guess I can really say I was a victim of this, just do what you're told kind of mentality with my first home purchase. It worked out.
Go buy it for.
Hey, you buy your house because that's what you do. You buy a house and it's a good investment because that's what you do. I didn't read any books. I didn't know anything about it. The one thing, the CHFA does have you, so I think their heart is in the right place in this because they do, to qualify for the loan, they have you go through this course. I knocked it out in a day. I don't remember anything about it. I think it basically told you go to the inspection and learn where the stuff is. I mean, there was really not much in there. But so they have you take a course, but it's not a financial education course. So my parents, for example, not money people, not finance people, there's a different conversation, but they would tell you you're either paying your mortgage or you're paying someone else's mortgage.
And that's good. I mean, that's
true. There's truth to it. Absolutely. And it's very catchy,
but it doesn't always make sense.
It doesn't always make sense
to buy. And
no, absolutely. Because here's another one that's catchy and also equally true. If you rent, your rent is your maximum payment for the month. If you buy, your mortgage is your minimum payment for the month.
True.
Because things break. When you rent, the landlord pays for it.
Yeah. So it depends on the time of life and again, that risk conversation.
Absolutely.
Like if you're just starting out and you don't have any money in the bank at all and you're living paycheck to paycheck, rent.
Yeah, absolutely.
Yeah.
Rent, save. Because that savings, saving is a habit.
Yeah.
And it's a learned skill. And once you can do that, now you can be qualified to move into a house and pay your own mortgage and stuff because you have that buffer and you have that discipline. So anyway, that being said, that's kind of where most people in America are at. They're just all they have. The only resource they have is their parents.
Yeah.
Unless they go and find something.
Well, and your parents are going to do the best they can.
Absolutely.
But
it's not.
But they don't.
They only know what they know.
Yeah. They don't know. I mean, unless they really dug in themselves. And usually it takes pain.
Yeah, exactly. And so, if you come from a family, you're fortunate to come from a family who is financially educated. You probably come from money anyway.
Maybe.
If that's the case, there's a good chance.
Yeah. Yeah.
But so then, you have a chance, you have a chance of lucking into a financial education. But if you don't come from that, you got to find it.
Yeah. You kind of wander around, but with Audible, like your brother just told you, go find some
great advice.
And really, if you just go read any book on financial education, go to Rich Dad, Poor Dad, start there.
Yeah.
Their mindset. There's a ton of books in Babylon.
A Simple Path to Wealth. I like that one a lot from J.L. Collins. And that gives you a bona fide investment strategy that almost anybody can use.
Yes. Yeah. And really, the simplest investment strategy out there is dollar cost average. Just save money every month.
Yeah.
It's really not that complicated.
Yeah.
Throw it into some ETFs, some market index.
Exactly.
Save money every month. There you go.
That's it.
If everybody just did that,
oh yeah,
you would never have to worry about retirement.
No, yeah, it would just happen for you.
$100 a month. It takes time. Time is your friend,
for sure.
So if you have to start young, but if I could tell any 20-year-old, okay, and if they said, what do I just go put $100 a month, $200 a month, whatever you can into ETFs, and don't touch it,
and then you'll retire at a reasonable age.
Don't try to time the market.
Don't try to. Nobody can do it.
Nobody can do it.
You can't time the market, and neither can I. That's one of my favorite quips from J.L. Collins.
Yeah.
He's.
You look at ETFs, ETFs, but money managers can't time the market.
No,
and these guys are paid millions of dollars to.
Absolutely. So how am I going to be?
Hedge funds can't time the market.
Yeah. No way.
I was a futures trader. My job was timing the market.
Yeah. I
had to give 20% returns every single month. Otherwise, I lost my seat. I lost my seat probably 4 or 5 times.
Yeah.
So I earned it right back. So it's tough. It's a tough business.
if I'm correct in this, and I might be wrong, I think Warren Buffett is one of the only people who's ever consistently beat the index line.
Yep. And then he just, by choosing companies.
Yep.
And then he also does some interesting strategies, which actually I use his method now.
Oh, okay.
Yeah.
There you go.
I buy stocks, I hold them forever. And unless, like he's selling Bank of America right now.
Oh, wow. Okay.
Yeah. But, I like the company. I believe in the product. And then I use simple option strategies to harvest money from that.
There you go.
So and it's really simple. Buy it and hold it.
Yeah. And that's everything, right? J.L. Collins talks about when he had one moment, I think, where he caved and sold one of the many stock crashes.
Yeah.
But for the most part, he says just go roll bunches. It's going to be tough. You're going to get beat up.
It's going to be tough. I mean, if you look at the market, there's going to be drops. There's going to be pain. Warren Buffett said that when the tide goes out, you see who's not wearing shorts.
Yeah, there you go. And another point to that, Warren Buffett recommended for his wife, if I'm not wrong, he recommends for his family, buy and hold total market index funds.
Yeah.
So the only guy that has successfully, consistently beaten the line.
He's not the only guy.
Oh, is he not the only guy?
No, there's other investors out there.
Gotcha.
But they're really few and far between.
Yeah, for sure.
I studied quite a few of them.
And am I correct in that Warren Buffett is the most successful?
He is the most successful.
Yeah, most successful stockbroker of all.
Stock investor of all time. Well, in the long term.
In the long term.
He's amassed, Berkshire Hathaway's amassed an immense amount of wealth.
Gotcha.
And so, he's experienced all 2008, experienced 1987.
Mm-hmm.
I mean, he went through all these tough times and he just buy, hold. That's it. And so that's really just go do that. It's really, that's why I think people, they're bored by that.
Yeah.
And they think, oh, that's just too simple. No, it's that simple.
That is. And that's the thing. We have a culture that really wants there to be this get rich quick scheme, this way to get rich and not have to work for it and just have it, and that just doesn't.
Oh, I'm going to go make $1 million on YouTube.
Yeah.
I'm going to go make it. No. You know what? Just make $100 and put it in the bank.
That's right. Yeah. And buy and hold is simple, but it's not easy.
That's right.
And
that's exactly right.
And that's it.
I cannot emphasize how much it is not easy.
Yeah.
Because everybody's like, the market's at a huge high point right now. It's going to drop. Okay.
Yeah, it probably will.
Yeah.
Probably will. But don't try to time that drop.
Yeah. And
also it'll come back and if you look at the history of the stock market, it is a straight line up. Of course there's the dips, right? Yeah. But the dips don't last. It's not a mountain. It's a line up. Over the last 40 years, it averages an 8% return, I think.
Yeah. And I've studied the market back until the 1800s. And I know you just have to stick with it. And I think the same thing is with real estate. In fact, I find it to be even more strong with real estate because it's not a liquid market. And so you have to buy something and you have to hold it. And if you try to hold on to it for 2-3 years and then sell it, you might make money, but it's kind of the same thing. That's why real estate is such a great investment because most people go in, I'm going to hold on to this piece of property for a long time.
Yeah. Yeah, absolutely. Except for the other side of people who just hold it till they move to their next house, which can work out. That often works out for people. But that's not an investment strategy. That's just a living arrangement strategy that might make you some wealth.
That's right. You might luck into some equity growth.
Yeah.
But like if you bought in 22, 23, you're not.
Yeah. If you bought in 2005, and tried to get out in 2008.
Yeah, it'd be hurting.
Yeah.
But there's like those few periods where it doesn't work.
Mm-hmm.
And then the rest of the time it does work.
Right. Yeah. It's just like anything.
And at the same time, if you'd have bought in, 10 years ago, you're killing it right now.
Oh, absolutely. Absolutely.
And so it's that's why when you went into this multifamily property, that's one of the questions I asked you was how long are you going to hold on to it? You're like, well, I'm not going to ever sll it.
Yeah. The plan isn't to never sell it unless, maybe in my 60s or something.
If eventually you want to, bump it up to an apartment building.
Yeah.
And you want to sell out all your small multifamilies and move up into an apartment.
Yeah. That's a good idea. And that's something
you can do a 1031 and then you can put it in an apartment building. And then you'd be making a better cap rate and taking advantage of a lot of different tax options.
Yeah, that's definitely a good option, but that's not for at least 10, 15 years.
15 years from now.
Yeah.
But that's,
I guess that's not as long as I think, but it's
that's what
to think about.
we did. We sold our investment portfolio and we moved it up into commercial properties.
There you go. And I imagine are those easier to manage, would you say?
For me, they're vastly.
Yeah.
Well, yeah.
Yeah.
I outsourced all that.
Because that's in my head now, that's the reason to sell for any reason is to make my finances easier to manage. So,
well, that you want to make sure you're increasing your returns. So eventually you're going to be able to, you're going to be able to leverage your position that you have in these multifamilies to increase your returns yet again. Because you took that, you had that investment, that $50,000, $60,000 that you'd saved up. You leveraged that, you bought it one property.
Yeah, that cash flows for me.
Exactly the same thing. You're going to be able to do it 10 or 15 years.
There we go. Yeah. So that's the plan. That's the strategy. Oh, what was I going to say? Oh, you brought up 20, if you bought in 21, 22, 23. Yeah. So before I get into it, I will say I don't think it's a bad wealth building tool to buy a home and live in the home, but I wouldn't call your home that you live in an investment.
Oh, that's right. Because we talk about the home you live in is a liability.
It's a liability because it doesn't make you money based on the Robert Kiyosaki definition, asset versus liability.
Yeah. Let's talk a little bit about that. I want to really dive into that. I want to dive into that concept a little bit because I think it's really important to understand. So an asset is something that makes you money.
Yes.
A liability is something that costs you.
Yes.
So like the personal home is, so let's talk about the difference. So I live in a single family home. You live in a multifamily property. Your multifamily property,
it makes me money.
It makes you money.
Even with me living there.
Yep. Even with the repairs, even with all that stuff, year over year, it's making you money. My single family home is a liability, costs me money to live there.
Right. You own it outright if I don't mind my asking. Yeah. So that's great.
Doesn't matter. I still have to pay taxes, insurance.
Yeah.
I pay and
utilities, fees, all that
stuff. Every single month that house costs me money.
Mm-hmm.
And so that's a liability.
Yeah. So there's nothing wrong with that. No. There's nothing wrong with having liabilities.
Yeah.
And in my opinion, like I'm of the philosophy, do what you want to do with your money, but there are strategies to invest properly. You know what I mean? Like I kind of got that from, if you've read, I Will Teach You to Be Rich by Ramit Sethi.
I haven't read that one.
Okay. It's philosophically kind of similar to A Simple Path to Wealth in that it's much more specific in the ways that Ramit likes to tell people to invest. Like he has, where J.L. Collins would say, buy VTSAX. Essentially, I just told you that's the simple path to wealth. I just told you what it is. Buy VTSAX. But Ramit Sethi would say, diversify your portfolio in this way or that way, but it's buy and hold. And his main philosophy that I really get behind is spend money on what's important to you, cut costs on what is not important to you. And then beyond that, try to do 85% of everything right. And the rest of it and you're doing better than most, things like that. He's got all kinds of strategies. So it is a longer book, but for me, that was the main thing, is spend money on what's important to you. So I'm
finding what's important to you is really, really hard for a lot of people.
Yes.
Because they think things are important to them.
They do. And I think we kind of have especially in our youth, we have I'm going to call it a problem with entitlement, with I should have everything that
I deserve it.
He has and he has and she has. Like I deserve to have what they have. Well, you don't know what they went through to get what they have. You don't know if they invented something. You don't know if they spent, 50% of their pay or saved 50% of their pay or whatever. You don't know what they went through, and you don't want to go through the same things. You just want it. And the real ugly truth behind that mindset is, one, it's a scarcity mindset as opposed to an abundance mindset, which I kind of just can't abide. But it's also, if you're successful in getting the world to believe the way that you believe, when you believe that way, you don't raise your level as you are trying to do. You're not able to raise your level to their level. That's what we all want.
You're not pushing yourself forward.
No, you're just pulling their level down.
Exactly. And
so people don't want to, and it kind of comes back to, it's a simple solution. It's just not an easy solution.
Yeah.
So anyway, that being said, figure out what's important to you, spend your money on what's important to you. And so it's not a bad thing. It's important for you and for your family to have a house. And I know you guys love this house and it's great, but you guys have done so much and you've sacrificed so much and you've educated yourself so much that you can indulge in the things that are important to you. And you're doing great anyway.
Yeah.
You know what I mean? But that's the difference.
I have had, when I used to be a Dave Ramsey financial counselor, and it was about 20 years ago, it was about 15 years ago, I was having a conversation with a couple, and they had probably $70,000 to $80,000 worth of car debt.
Okay.
And they made about $30,000 a year. And they said, but I deserve it.
Why?
You didn't pay for it. So, and they were just drowning in debt.
Oh, well, yeah.
And they couldn't, they're like, every single month, it was just a fight. They're like, well, we get through every single month. It's like, okay, I want to put my money in investments that are going to grow. And I said, what you guys are doing is putting your money in investments that are going to shrink, because that car is a liability, and it's going to just drain your money. And so people don't want to hear that. They get really emotional. And I learned how to approach that in a different way, because people get really, really emotional about that. They want to spend their money in a way that's not, it's just going to, and it's going to hurt them in the long term. And that's one of the reasons I went from where I was to where I'm now. And that's because I want to help people, and I want to help people find that path that's the best for them, that's going to bring them long-term growth and wealth. And I think single-family ownership, home ownership is that, even though we talked about how extensively that my single-family home is a liability, when you had that single-family home for 10, 15 years, you get equity growth out of that.
Yeah.
And then when you go to sell it, that's when you
get your investment out of the deal.
That's right. But the interim is a liability.
It was a liability in the interim, for sure.
And so you could rent and buy rental properties.
Right. Or invest all that money in the stock market or whatever.
Yeah.
There's many different ways to invest it, right? But that reminds me of, so my girlfriend's mother she's a life coach, and she's an investor herself, and came from very, very poor, like made her own clothes poor when she was growing up. And then now she's a multimillionaire. And it took a lot of sacrifice. She ate popcorn and Jell-O in her 20s.
Yeah.
As an engineer, a successful engineer, she was eating popcorn and Jell-O to make enough money to get herself to a wealthy position. And it's funny now, because now she has those habits so ingrained.
It's hard to change.
Right. When we go to their house, they have this beautiful property in Pagosa Springs. So we go and visit them. And she can tell us the difference in her utility usage from the day before we got there to the day after. She just knows about it. She's not mad about it, but she's it's so ingrained. Anyway, so she looks into trends and things.
Well, that's a really valid point. That I want to just pause there for sure, because it's funny that somebody who really fought that hard to get there, they understand like where their money's going.
Absolutely.
And so that every single cent.
Mm-hmm.
And that is so important to understand. Most people don't understand where their money's going.
No.
And for you to save 50% of your income to buy this multifamily property, you had to know where
I didn't know where my money was going.
And she knows how much it's costing to have visitors over to the house. She knows where her money is going.
Absolutely. And I will say I've never been near, and I'm not now, nor was I nearly that meticulous with it.
Yeah.
But
I don't think,
but for sure, got to be paying attention.
You're just paying attention.
For sure. Anyway, that being said, so through all of the things that she does in life coaching and things like that, she looks at trends. She looks at generational trends. Mm-hmm. And a disturbing generational trend that she found. So to our point here about, how you deserve this and you can't have it, or things like this. My generation and the generation after me, for the most part, they don't believe that they can ever have a home. They believe that it's been taken from them, that opportunity.
They've been told that.
They've been told that. And that to me, like, it's so sad. You know what I mean? And it's encouraging to me that people like you, who are successful in this field, in finance, in real estate and things like that, want to come back and help people, because we need it. My generation needs it. Truly.
Yeah. Well, what's fascinating to me about your situation is you just decided, I'm not going to accept that.
Yeah. I mean, and
just found your way.
And yeah, I don't know if it's a personality thing. I don't know if it's a background thing, but
I think it's a jiu-jitsu thing.
I think it is too. I truly do. But yeah, I mean, it's one of those things that just teaches you to go through adversity, to grow because of adversity, not to run because of adversity.
Yeah. And yeah, I mean, if you're going to stick around in jiu-jitsu, because you're going to get your ass kicked for years.
Oh yeah. It's not easy.
Yeah. But it's worth it. It teaches you, I'm going to figure this out. just not going to take it. I'm going to figure it out.
Exactly.
And so that's the mindset. And I think it's like that warrior mindset that a lot of people are lacking. But you see it in our community.
Yeah.
You see these young guys. I talked to a couple different young guys. They're like, hey, I want to do that. I want to buy a fourplex.
Yeah.
I want to do that. And they're like, I think you've shown them an example that's going to be really strong. You know, how many guys are going to be able to go out there and say, okay, I can do that too.
Right.
If Daniel could do that, I can do that.
Exactly. And that's the abundance mindset versus the scarcity mindset. The scarcity mindset that our culture pushes, it's so defeating.
Yeah.
You know what I mean? If you have that scarcity mindset, it's, oh, they already took everything that's worth taking. What are you going to do?
There's so much opportunity out there.
Yeah, there's so much opportunity about that. But it turns your brain off. Like, as Robert Kiyosaki would talk about, like, it turns your brain off because you think, I can't have it because somebody else already has it. And it's the mean word for it is it's pathetic. And why do you want to be that way? You know, I mean, even if I'm wrong, let's say we're wrong. Let's say you and I, there's not anything else out there. It's all been taken. You know, I just looked into it. I took the last one. You know what I mean? Let's just say we're wrong.
Okay.
Do you really want to go through the rest of your life believing that? I don't.
No way.
No, absolutely not. So anyway,
hunting for those deals.
Right. Hunting for those deals, knowing you can do better, knowing that your family can do better.
Yeah.
You know?
Even if you take losses, you make a mistake, figure it out, you move on. You get, you just keep figuring it out. That's financial life.
Yeah.
Financial life is difficult.
That's life.
Yeah. That's life. You just keep going.
Absolutely. You have to, because the alternative is to sit down and die.
Yeah. And that's what, and when you don't take control of your own life, that's what you're doing.
Exactly. You're just sitting and sorry.
Yeah.
No one's coming to save you.
Yeah. If you want to have a fulfilling life, you need to take control of your own life and you need to push yourself to be better.
Absolutely.
Every single person, every single day. And every single day that I don't push myself to be better, I look back at that day and with regret.
Yeah, that's it. And I mean, if everybody was like that, I think the world would be a lot better place. But I'll tell you a personal story, not really finance related, but towards the end of my time in Toledo. So I got a staph infection and I had already had bursitis in my knee, which is just a condition. Your knee swells up. It's not always painful. Mine was, but it just swells up a lot. And you have bursa sacs in your joints that lubricate and you probably know more about this than I do.
But I know exactly what you're talking
about. Yeah, but for our listeners, you have bursa sacs in your joints that lubricate the movement, and when they get irritated or damaged, they can swell up. And so I had a swollen knee, double the size of my other knee, just through bursitis. I got a staph infection in there. And after fighting with this for a while, I went to the hospital, didn't have insurance or anything. So finally went to the hospital. The orthopedic team looked at it. Before they did anything, they're like, cool, you're going to be on antibiotics for probably a month. We'll drain this thing, hopefully get you out of here. Well, they drained it. And what came out of it was so like nasty and had stuff in it.
Yeah.
To where I was on the table having gone through this draining of the knee, which is not without pain.
No.
Anyway.
No, I know.
It's not fun. Anyway, so I was on the table kind of recovering, and the PA, her head comes into my view and she says, we're going to admit you need to get an emergency watch out surgery. On this knee. Yeah. Anyway, I was in the hospital for a couple of days. And that was one of the things that led me to coming back home. But I had a girlfriend out there at the time who came to visit me at the hospital, and she was just distraught, about like, what are you going to do?
Yeah.
How are you going to get through this? And I looked at her and I said, listen, I'm not done. I'm going to be fine. I'm going to get through this. You can believe that or you can't. And, we broke up eventually. Not that second, but we did
couldn't handle the difference.
Yeah, she couldn't handle the adversity, which is fine. You can't. I'm not upset. I'm not mad at her. I don't think she's a bad person. Nothing. Anyway, but I think that's an important mindset to be able to have when you go through adversity is I'm going to get through this. You know what I mean? And it might hurt and it might cost, but I'm going to get through it. And if the alternative to me is just not an alternative at all. Now, as far as like the people with their spending problem or their I deserve this. So yeah, I'm going to have $80,000 in car debt, even though I only make 30 a year. J.L. Collins has a really, really interesting, I feel like I'm he should be paying me for how much I'm name dropping him, but he has a really, really good analogy for this. And he tells it in The Simple Path to Wealth. He's talking to his wife when they were early dating, and she asked him, why do you save so much of your money? For reference, 50%, I think, was his baseline.
Yeah.
Just all the time what he would be investing. And he said, well, I don't really save my money. I spend all of my money,
100%.
and I spend almost half of it immediately. I just don't spend it on a house or a car or this or that. I spend it on my freedom.
Yeah.
And that's what it is. That's what we're doing. Yeah. You know, I mean, because like your bank account can grow, right? The number in your bank account, cool. You know what I mean? It can grow, and maybe it does I'm sure it brings some people a lot of satisfaction, but
it's never,
the freedom that you can buy with it, that's valuable.
Well, and it turns into something later.
Yeah, absolutely.
As you'll see as you grow through this process, like, okay, great, I've hit that goal. But next, great, I've hit that goal.
And just stacking habits, stacking achievement.
What do I do with it?
Yeah.
How can I best perform with it? How can I best serve my community with it?
Right.
How can I best, a good member of society with this? These are all very important things. What do I want to do about myself? How do I want to improve myself? These are all super important stages in our life.
Absolutely.
I think just that money piece, people get stopped.
Yeah. They get stopped. They say, money's not important to me. They say, we have all these excuses for our lack of education. And
I'm always going to be in debt. Always going to have a car payment.
Right.
Always going to have this.
I'm never going to be a rich person.
Yeah.
I'm never going to be this or that. I keep going back to these books, but
well, yeah.
Robert Kiyosaki talks about his rich dad would never say he was poor. He might be broke, but he is not poor, because poor is permanent. Broke is temporary.
Yeah.
And actually that does bring us back to these, we're talking about a bunch of different financial strategies in this, but I will say one thing I do like about the strategy of real estate is it gets you to that position of, it has potential, I should say, to get you to that position of, okay, what can I do to grow? What can I do to challenge myself? Like, it gives you time quicker. Because if I had, let's say I just only did the stock market side of things, and I'd retire probably at the rate I was saving. I'd probably retire by 40, I imagine, with the rate I was saving my money.
Yeah,
which would be great.
Yeah, you're safe.
Which would be cool. And then the 4% rule, which is you're
not going to retire super wealthy, but you
but you could retire.
You get a lot more freedom,
being financially independent pretty quickly. Now, having utilized a strategy to get a fourplex that cash flows, I don't have to work as much. I can subsist on a part-time job, and the rest of my time can be my own. So, and that wouldn't have happened just investing in the stock market.
No.
Granted, I have more risk because I invested in real estate.
Yeah, but you could always change what you're doing.
Exactly.
And right now you've taken this opportunity not to slow down, but
to do what I want to do.
What you want to do.
Exactly.
You don't want to go. And so that's what I'm really curious to see what your next steps are, because I know you're going to compete in Masters Worlds this year. And then I'm really curious to see where you go from there, because I know you're not going to be done.
No, for sure not. I want to compete, and that's a very personal growth journey for me. Really, it is. It's not a matter of like winning titles is great. And I've won some tournaments, and I've, medaled at some things already. That really I can look back and I can say, that's pretty cool. You know what I mean? I did that, but it's not about that. It's about what's my potential.
Yeah.
Where can I get? Yeah, exactly. And eventually it's not going to be within athletics.
Yeah.
At all.
No. And that's really what I'm curious about.
Yeah. And
because I know that you'll do well at Worlds,
and
I think that's going to be fun. I'm going to be there. That's going to be.
Yeah, it'll be a good one.
But I want to see where you're going to go, because I've been kind of watching from the background, like, all right, what's next?
Yeah.
I know you've been changing up your career a little bit, and now you're focused on teaching, and you're focused on athletics and jiu-jitsu. So I'm kind of curious to see where you're going.
For sure. And I think the next step really, and I have a few different ideas, but the next step really is to like you talk about, give back.
Yeah.
And I think that's one thing that I'm very excited about this podcast for. Because for you to just run it, because it really is such a focus on helping people. I'm about that.
Yeah.
And so that's.
Well, you have to be a regular guest then.
Right. Oh, I'm definitely down to do that, but I just think that's huge. And so that makes me think, like, what can I do to do this? Because like I said, that generational problem of my generation has that scarcity mindset. A whole generation to have a scarcity mindset is a scary thing.
Yeah. I don't think it's the whole,
it's of course it's not, but it's just the trend,
There's a lot, I guess I'm ever optimistic.
Right. Which is, it's kind of like what we were talking about was, why would you want to be pessimistic?
Yeah. Exactly.
Yeah. Why would you want to be that way? But
I think there's enough guys are going to find, and guys and gals are going to find their way, you know, to to a different way of thinking.
Yeah.
And to grow. And
Yeah.
to find it through.
I'm hopeful. And that's the thing, like history kind of has a way of being that way. You know, there's that cheesy meme or whatever you see on the internet that says something about strong men create good times.
Yeah.
Good times create weak men. Weak men create bad times create strong men, whatever.
Yeah.
There's truth to it. It's cheesy.
Yeah.
Just call it what it is.
I mean, it's kind of,
There's a lot of truth to it. But anyway, as far as history, I think that holds up. And so anyway, but I do really want to help people with that. You know what I mean? Whether that's through jiu-jitsu, whether that's through, well, and book, something. I don't know.
Hard times could be different times for different people.
It's true. It's absolutely
anybody who is, a veteran of GWOT, Global War on Terror, those last 20 years were not easy times.
No.
And they're struggling now. And we see a lot of jiu-jitsu, a lot of veterans.
Yeah, we do.
And so I really encourage veterans to go.
Absolutely. Absolutely. I think jiu-jitsu is such a huge avenue, not only for your personal growth, but like, as we've, learned, it's a huge networking tool.
It is really,
because you have all these people who have that growth mindset, who do hard things, who want to improve. And many, many, many of those people are not unsuccessful people. You know what I mean? They're people that can help you. They're people that can be the real estate agent you need that you didn't even know you needed. They can be that lender that can help you with that strategy.
There's so many cool people.
Absolutely. There's plumbers there that I can, and it's not about using people. It's just about helping each other.
And everybody, we all speak to each other because we all know this person's pushing themselves. You speak to that person a little differently than
for sure
somebody who's just kind of meddling.
Oh, 100%.
You want everybody to be pushing themselves.
Yeah.
So it's
cool to have a community where they do.
Yeah. And it could be jiu-jitsu. It could be church. It could be, Bible study.
Gym.
It could be the gym.
Yeah, whatever. I mean, it maybe could be the bar. I don't know. You're probably not going to have as high a percentage of good people at the bar, but who knows? I mean, it's like that community is so important.
Yeah.
And I think that's something for young people. That's a really good thing to find. I lucked into it.
And not a community. I mean, communities online are a good starting point, but you have to be around people.
You got to be around people. The keyboard is too much of a barrier, in my opinion. It's because people online can say whatever they want. There's no consequence. And that's something to be said about jiu-jitsu too, is, we fight each other. So there's consequence of you.
We choke each other out.
Yeah.
Yeah. That's not,
but
there's not a lot of people there who talk a lot of shit.
Yeah. Yeah. You're not going to talk. Yeah. You're not going to do that. But I mean, there's resources online for sure. They're just not as powerful. They're never going to be as powerful.
And there's groups everywhere.
For sure. Yeah. And it doesn't have, like, jiu-jitsu is just what we do, what we like to do, but there's kickboxing gyms. There's non-martial arts gyms. You know what I mean?
There's running clubs. There's
running clubs. There's CrossFit. There's powerlifting.
I mean, Aaron.
Yeah.
What an amazing guy.
Yeah.
That guy is big into the CrossFit.
Absolutely.
And,
Adam Wheeler jumps into CrossFit.
That's right.
Once in a while.
Another drop.
Yeah, exactly. No, so I think that community is just a really, really big tool.
Yeah.
Really big tool to have. If I had any like actionable advice for young people trying to do better, not being dragged down by the scarcity mindset, but
find a community
where
people are pushing themselves.
Yeah, absolutely.
It could be anything. That's the great part about it.
It can be anything. It's whatever you're interested in. I mean, just whatever you want to do, whatever you like. Look online. You can find a club.
Woodworking club.
Totally. I'm sure there's
podcast club. I mean, there's all kinds of stuff.
There's got to be
everywhere.
Yeah.
Get together, meet up, and talk. And there's investment clubs. So, if you go to Meetup, there's a Colorado Springs, there's a Denver investment groups that just meet up and they just talk.
That's great.
And they share information.
That's great. I don't know that I would go to that personally. I don't know that I would go to that all the time because I might get bored just with that. But I mean, it's still so valuable. You know what I mean? And then, like, give you a little context, when I was considering doing something, because I was young. I was 19 years old, just out of high school. Didn't have a plan, really. Didn't have like a degree I wanted to pursue. And I was delivering pizza, and I was bored. I was bored. And so I was like, I got to figure something out. And so the two things I looked into maybe playing rugby, and I couldn't really find it. It was out of season. And then I've been an MMA fan since I was a kid, And so I was like, okay, well, let me see if there's like jujitsu or something. I bet I could do that. And then Prime was the closest place to my kids. That's 11 years later. You know what I mean? And it's been instrumental in my life.
Yeah.
It just all across the board, you know? So that community is really, really important.
That's a really good point. When you're 18 and you're floundering around, or even younger, go find a community.
Yeah. And even if you're not necessarily that way, because I went to a school, I went to TCA. I think my kids go?
My sons go there.
Okay. Yeah. So that was my alma mater as well. As you know, I'm sure most of the kids, seems at least, most of these kids at that school, and it was that way when I was there, they know what they want to do. They know where they want to go to school. They know what they want to be when they grow up. Of course, that changes because you're young. You don't really know until you
think you know.
You think you know, but they all think. So I was kind of growing up in that, like, you know, I had this kid who knew he wanted to be an engineer, this kid who knew he wanted to go to the Air Force Academy, and I'm sitting there. People are asking. It's getting to be junior, senior year. And they're like, what do you want to do? Where do you want to go to college? I was like, I don't know yet. Like, it didn't happen, you know? I didn't figure it out. Anyway, so for me, it was, I would say, necessary to progress my life, to find something, some kind of community, some kind of growth avenue. But even for those people that do know what they wanted to do, you know what I mean? I think it's a huge, super valuable resource that you shouldn't ignore.
Well, I mean, if want to know you want to be an engineer, join an engineering club.
Yeah.
You know, and that's what, you know, I have a brother that works for SpaceX, and he says that's what they look for when they look for employees. They look for people who've joined a club, done this, you know, trying to apply their skills and join a group. Yeah.
And SpaceX is owned by Elon Musk, correct?
Yeah.
So he is, I read his book actually too, his biography.
Oh, it's by,
I think it's just called Elon Musk, but it's very interesting. But he taught across all of his companies. He talks about, he wants people to be obsessed with their work. He wants people to be, he calls it hardcore. And
that's why they cycle through a lot of them.
Oh yeah.
It's really,
for sure,
be hardcore for a long time.
It is. It absolutely is. And
my brother is obsessed with going to Mars.
And so he's the guy, you know what I mean? He's the ideal candidate. And I think it's good to be obsessive with certain goals. Absolutely. Yeah. It doesn't make you a well-rounded person. It does. But
for a short period of time, I think he'll eventually come to the end of his career. And then he'll do something else. But it's, you know,
there is life after your obsession.
Yeah.
Right.
And then you find something else to be.
Yeah, for sure. For sure. But it is, it doesn't necessarily make you a well-rounded person. But that's
because I was obsessed with financial markets.
Yeah.
That's one of the reasons I had to stop doing it. Yeah. I did it for 10 years, and it just took so much, 16 hours a day.
Yeah.
And now I'm kind of moved into the obsession of real estate.
Yeah, for sure.
Which I love doing, but it's fun. But I can limit my time a little bit.
Yeah, I'm definitely kind of that personality as well, as far as like, if I want to do something, I want to do it. I mean, and I do obsess about it a little bit. My dad used to call me obsessive when I was a kid.
Yeah.
And I used to get mad about it, but now I'm kind of like, you know what? You were spot on. I thought he was overusing the word, right?
Oh, okay.
But no, you're right. I get when I want something done,
if you want to do it, if it's worth doing, do it right.
Yeah.
Go all the way.
For sure.
Go all in.
Absolutely. Absolutely. But yeah, so these,
I like to play poker, so go all in.
Yeah, right. There you go.
You know, I love those all in moments, don't you? You know, you see those all in moments.
Oh, totally. It's way more exciting. It's way more exciting than a couple of people just strategizing. Yeah, I can lose a
little bit here. No.
Yeah,
go all in on strategy. Go give it a shot
for sure.
You know, if you fail, you fail
for sure. I bet Elon Musk is way more fun to watch play poker than JL Collins.
that guy goes all in
on everything.
On everything he chooses to go. Yeah, it's impressive.
Yeah, and I thought his biography. I did like his biography a lot. As far as that,
I have not read it.
Yeah, it's interesting. It's long too, but it's. I
read the same guy wrote Benjamin Franklin. He wrote a bunch of biographies. I've read those.
Gotcha.
What else did he wrote a bunch of them? So.
Gotcha. Yeah, and it's interesting. I think it's very informative as far as like the type of, assuming it's all true, as far as the type of person Elon Musk is, because he has this perception about
an abrasive way about him.
He does have an abrasive way, and it doesn't hide from that. It really doesn't at all, the biography, but it kind of sheds a lot of light on his motivations. So, which I thought was really interesting.
I find his motivations, I mean, everybody kind of their own opinion, but I find his motivations to be pretty pure.
Yeah.
You know, and really.
And that's what the biography would argue as well.
So. He really does want to keep humanity around.
He has these goals for humanity, and that's what he cares about.
Yeah.
And I think it's kind of.
And really, it's just survival.
It really is. But it goes back to that. It goes back to that scarcity mindset versus abundance mindset. He is a billionaire.
Yeah.
And these people of the scarcity mindset hate him for it. And they will always hate him for it. You're not going to argue with those people, I feel like, but his companies are successful, but he has built these companies not for the money. It's for his goals for humanity. Oh, of course, that leaves to be argued, is he correct in his goals for humanity? Who knows?
Who knows?
Who knows?
But he went all in.
He went all in.
You
got to respect that.
Yeah.
I respect conviction a whole lot more than I respect a lot of other things.
I mean, you could be critical of him all you want, but and that's everybody's right to be critical of him. But he did. He said, this is a problem. I want to fix this problem. He fixed the problem.
Yeah, absolutely.
And people don't like the way he fixed the problem. Fine.
Yeah.
We'll fix that problem too.
Yeah.
But that's is just the way, to approach.
It's just the way it is. Yeah. People. And I think, I don't know, we could go into politics behind and everything else. Probably don't need to do that.
No, yeah.
But, there's something to be learned, I guess. I'll leave it at that.
Yeah. There's something to be learned from him. I mean, there's something to be learned from all these, these great authors we've talked about.
Yeah, absolutely. And they put it all in a book. So go look at it.
Right? I mean, what an amazing resource.
Absolutely.
And Audible too. Shoot.
Audible's a great resource.
I drive a lot and I listen to Audible all the time.
Yeah. Audible, it's great. It's a great way to do it. Like, I'm not a reader as far as like just strictly open up a book and sit down and read it. I can do it, but I don't. You know what I mean? I just won't. But I'll listen to a book and I'll really enjoy that. So I like Audible a lot for that.
I do both, but I read and listen a lot. But that's just
yeah, for sure.
Everybody learns something differently. People learn by watching videos.
Yeah, absolutely. And there's a ton on YouTube as well. Mr. Mustache, all these kinds of
yeah, that's great.
He's great. He's great. And this wasn't him, but there was another one. This is another thing as far as like the financial education in America.
Mm-hmm.
I stumbled upon a video it was just this guy he's a money guy who's talking about, or, just a do-it-yourself for money guy, I guess, who has a YouTube channel. Anyway, he's talking about this conversation he had with his kids. And he was like, without you guys knowing anything about finance or anything else, what do you think we should do if we want to get rich? He said his kids said, well, I think we should buy things that make us money. Yeah. And he said, you, in that statement, have a better financial understanding than almost everybody adult in the U.S.
Yeah, I'm sure that kid heard it somewhere before.
I'm sure.
But at the same time, that is so true. Again, we talk about the assets and liabilities. Those are just names of what we're talking about.
Exactly.
Buy stuff that makes you money. Car, unless you're using it for Uber, and even that's questionable. Does not make you money.
Right.
House that you live in does not make you money unless you're renting it out. Buying something that makes you money, and that compounds incredibly fast.
It does. It really does.
We give it time, and it really does.
That's the other thing. As far as like, so the timeline of this fourplex project was pretty quick between inception of idea.
Yeah, 18 months. That's pretty fast.
It's pretty quick. A big part of that was a side job.
Oh, like I shared.
Yeah, like I shared is I got that side job, and it's teaching jiu-jitsu. I've been doing jiu-jitsu a long time and had an opportunity. And I was like, I'm saving money at a pretty good rate. I want to be productive with this. But that is a powerful habit as well. And for me, it's something that I love.
Yeah.
You know what I mean? So it makes it easy. Like anybody could get a side job, delivering pizza or something, which that's not as fun.
More fun when you do something you love.
Yeah. It's definitely more fun when you do something you love. So if you can find a way to do that, for sure, absolutely do that. But I mean, because saving money is a really, really powerful habit, and cutting your expenses is a great way to do it. And it builds really good habits for sure. But there's only so much you can cut. There's a limit to it.
You had to sacrifice when you were saving half your income, and sacrifice. I mean, there was times
absolutely
you chose not to do stuff.
Oh, absolutely. Yeah, for sure. I mean, for me, I'm kind of a boring person as far as like the things I like to do. I don't travel a lot,
I call you Spartan up.
Yeah, well, I appreciate that. But yeah, I mean, there's a lot of things I don't like prioritize.
Yeah.
Which does make it easier for me, admittedly. But I pretty much just like, I like to play video games. I like to hang out with my girlfriend. I like to do jiu-jitsu. Yeah. And, if I'm doing those things, and not even the video games all the time, if I'm doing those things, I'm pretty fulfilled.
Yeah.
So that makes things easier. But that goes back to talking about our priorities. Like you got to learn to prioritize these things. You can't just have everything that is shiny.
And it can,
if you want to be rich, I guess you can.
Well, I rich.
okay.
Just
Yeah.
good.
Yeah, it's just good financially. But
I mean, in the middle class is shrinking in America, and it's because I think it's a lot about what you talked about with this scarcity mindset.
yeah,
No, there's plenty of opportunity in America, and there's only going to be more. And it doesn't matter who's in office. It doesn't matter.
it's true.
As long as America stays America, which I don't think is going to change.
Yeah.
I think there's always going to be opportunity.
Yeah, I'd like to believe not in our lifetime it's not going to change. And that's another thing J.L. Collins talks about is because people who want to poke holes, because there's always going to be people poking holes in his philosophy of the stock market over the long term always goes up. He talks about, if an apocalypse happens, the stock market won't matter anymore.
It won't even matter.
And none of it, anything that any of us did is going to matter if that happens. But to think that that's going to happen in our lifetime is probably hubris.
It really is. It's very selfish thinking.
It is. And it's also just, what's the point of thinking that? There's no point. If I die tomorrow, I really don't want to know. Like, I really don't. I mean, if it, there's certain things, like if I got terminally ill or something, okay, tell me a week in advance so I can say goodbye to my family and the people who are important to me. But, if nuclear war is coming tomorrow, I don't need to know that.
Live every life, if you're not living every day, like it's going to all end tomorrow, then, what's the point? Live life to the fullest, don't leave regrets.
Absolutely.
Keep pushing forward.
But anyway, that's my, as far as the extra income is very powerful.
Yeah.
So as far as advice for other people who want to, think about doing good with their wealth or whatever, they have goals.
Or building something for their family.
Yeah, exactly. Like having an extra income is a really powerful tool. That would be the community and the extra income, I think, are the biggest pieces of advice I would give people to
say, like a 20-year-old.
Yeah, for sure. As far as in the realm of finance, find a community, because that's going to be a huge networking opportunity, and then get some extra income. And of course, you want to save. Everybody knows you save.
Yeah.
Everybody knows you don't want to go out to eat every day. I mean, unless that's something that's important to you, and then maybe cut costs somewhere else. Maybe live in a small place.
Yeah. I guess you could.
Yeah.
Yes, you could.
Or drive a beater car.
Yeah.
But you can't drive a Ferrari, live in a, multi-million-dollar house, eat a filet mignon for every meal, whatever. You can't do all of those things. You might be able to do one of those things. You might be able to splurge here or there. That's why it's so important to prioritize.
I mean, not everybody wants, but people who want all of those things, you'll find out that the things and the money is very unfulfilling after.
Mm-hmm.
And what you find is, again, we go right back to community and just
for sure. And challenging
yourself. That's what's huge. That's what's fulfilling.
That is what's fulfilling. Way more than
there's a loneliness epidemic out there. And you know what? Go find a community.
Yeah.
Go challenge yourself and you will find a community.
Yeah, for sure.
Really, that's it. That's a very simple advice.
Yeah. And it's huge. It's important.
Yeah.
That's probably more important than the money side of things, honestly.
I agree.
Is the growth and
absolutely. Because you could, it doesn't really matter. The money side doesn't really matter. You're not challenging yourself and you don't have community because you're not going to be, your mind's going to go into places you don't want it to go.
Right.
You need to have that community, have people to challenge you, push yourself, and then move forward from there. And then you get to do fun things.
Yeah, absolutely.
Yeah,
absolutely. Yeah.
So, all right. You want to wrap it up there? Or
yeah.
Anything else you want to talk about?
No, not off the top of my head. Yeah. I mean, I think I got offered a guest spot on here. So
well, I'll definitely come back.
Yeah, for sure. So yeah, we should do one with Jay if we can.
Sounds good.